Let's talk about that and more in energy. Rob Thummel is a four-star energy fund manager and senior fund manager at Tortoise Capital. Rob, Oxy's got $24 billion in debt and about $27 billion in revenue, so it's not quite one-to-one, but it's close. By comparison, Chevron has about $29.5 billion in debt on $187 billion in revenue. Oxy, a very heavily indebted company. Do you think that Warren Buffett's just going to have to buy out the rest of the business and kind of take it private?
Well, Brian, I don't think Warren's going to do that because I think he's had plenty of time to do that. But it's a good idea. But I do think Warren's going to help Oxy reduce its debt. Right, $10 billion if that's what's paid, going to be able to reduce that debt load a lot. Now, the debt to EBITDA ratio is not quite as bad as that debt to revenue ratio. The debt to EBITDA is going to drop down to about 1.2 times if this transaction would materialize, and that's a little higher than what everybody else is. Like, for instance, Chevron's probably well below 1 times, but it will help reduce the debt and I think make the Occidental stock a little more attractive going forward.
But you're talking about reducing it to those debt levels if this deal occurs, right?
Yeah.
I mean,
that's right.
Where is Oxy now when it comes to debt levels? Because it is, I think, one of, if not the most indebted big cap oil and gas company, maybe by far.
Yeah, it's closer to 2 times, about 1.8 technically, I think, if you look at the current EBITDA. And that's because the EBITDA is volatile, right? It goes up and down with oil prices to a certain extent. And so that debt to EBITDA level can really go up and down based on what the oil price is going to be and what you think the oil price is next year.
Why doesn't Buffett just buy the whole company?
Well, he might do that. You know, it's a classic Buffett company. High free cash flow, easy to understand businesses that everybody needs. So yeah, I think that's always a possibility.
He's kind of like buying bits of it, right? He owns 28% of the stock. Now he may buy the chemicals business. You kind of, I'll take the potatoes and I'll take some vegetables. You haven't gone for the entree just yet. We'll see. Would you own Occidental here or on this news, Rob?
Yeah, so with the energy sector evolving, we think oil prices are actually going to fall. So we're not an interested buyer right now in Occidental. We would actually rather own maybe a company that Occidental owns a little bit of, which is Western Midstream. Western Midstream is actually the energy infrastructure operator, and Occidental is one of the largest customers. The reason why we like infrastructure a lot more fee-based cash flow, less commodity-based cash flow. You look at Western Midstream, it's got a great CEO and Oscar Brown, and the board is high-quality board. It's done a great job of allocating capital. It's got a 9% dividend yield. So companies like that is what we like to own as well. So companies like that, we like EQT on the natural gas side more than the oil side as well. And so, and then lastly, we like electricity is the new oil. And so companies like Vistra are companies we like to own as well.